If you can recommend a good Pinescript that is actually profitable for trading futures, I can stay on as a customer. I thought
Dang
that was
it.
was a very good message. I like this one because the person actually put LOL, knowing that, hey, look, we're not going to be answering with anything they want to hear. Very hard for us to suggest anything to other people because I always think to myself, whenever I have a client message me and go, hey, can you just give me a profitable strategy? This is what they'll say, actually. They'll say, give me a profitable strategy and I'll pay you off the profits that I make off of it. I go, what do I need you for then? Why on earth do I need you?
Right. And obviously, if we had a profitable Pinescript strategy that worked 100% of the time and never failed, we would just go fully levered into that and shut down TradersPost and just trade our own capital for eternity. But I think that we've done a pretty good job on our shows in the past and within our documentation, and just generally speaking on, like the blueprint and some of our other shows, that generally strategies kind of fall into one of two categories. It's either mean reversion or trend following. And it's not the Pinescript necessarily that's going to lead to the best strategy, particularly if it's overly complex. We've discussed here in the past that simplicity tends to be the best path. It tends to lead to the best results, especially if what you're looking for is in one of those two categories. There are very simple ways to set up a Pinescript that will follow a trend. There are very simple ways to set up a Pinescript that will take entries at reversals and manage, stops accordingly. And there is no holy grail Pinescript out there, because the Pinescript itself is basically just a language that helps you solve the problem you're looking to solve, execute the trade the way you're looking to execute it. We have many ways in which we can show you how to get really close to market beta, meaning you can get really close to the way the market is trading today and over a period of time, especially in a trend following strategy. Even the VWAP strategy that I've been working on has a really high beta, but basically just trend follows and holds most of the day session. Then there are other reversal strategies that I've developed that have a little bit of, they have less beta to the market, but they're a lot more risky because they have larger drawdowns, and I'm waiting for that price to get to the target point that I'm hoping for. And the risk reward looks pretty upside down, but once you actually count for all the trades, they actually come out pretty good. So what you'll find is that any well-documented strategy out there, they all tend to have pretty much the same performance benchmarks. Trend following strategies tend to have about a 60 to 70% win rate and a profit factor somewhere around 1.5 or 2. If anybody tells you that they have something above that, it's most likely a lie, or it's using leverage. In the case of leverage, it just means you're taking on more risk. Mean reversion strategies, on the other hand, tend to have a higher win rate, but they have a way different risk reward proposition. Sometimes they'll have really big drawdowns, because in order to win at a mean reversion trade, you have to allow it to continue to go against you until you've gotten into the position you're hoping for and it comes back. In many cases, they might be break even. But once you've observed all these different Pinescripts, all these different strategies that are out there, they all kind of do the same thing, and they all tend to have the same performance. So we at TradersPost can guide you in that direction of thinking that way, but we don't have a specific Pinescript to help you pull right off the shelf. It's kind of up to you to decide what path you want to be on, how much risk you want to take, whether or not you want to use leverage. And we wish you all the best in that endeavor. It is a really tough challenge.
I strongly recommend that if you haven't already, go take a look at Mike's Trading Bot Sessions series on the TradersPost YouTube channel, because not only to get a wealth of information from different perspectives, you'll be fascinated by how many times what Mike was just saying is distilled again and again and again in different ways, and how many times, Mike, have you heard them say, it was really a turning point for me once I understood that it's the simplicity of the idea and the risk management of the position. And
It's those two things. Yeah.
Yeah.
It's simplicity rules at the end of the day. You keep it simple, stupid, or the KISS method, right? And then the other is risk management. Once you realize that it's really about not going all in on this one idea, but rather maybe reducing the position size, especially reducing it if there's a series of losses, using Kelly criterion in order to adjust your position size based on historical performance. There's so many different ways in which you finally just get to a point where you're just trying to stay in the game long enough and survive through risk management. That once you finally hit that winning streak, that's when you start adding to it. I remember talking to a trader a long time ago that was like, every day, the other traders that he used to trade with would constantly add to losing positions. And in his case, all he ever did was cut his losers immediately and walk away for the day and come back the next. And then once he was in a winning position, he said, just buy more, just buy more. And he kept adding to winning positions over and over again. And that's largely how he got the edge that he was hoping for, really kind of the asymmetry in his trades that he was looking for, is adding to his winners and not his losers. I like how Paul Tudor Jones had a sign on his desk back in the 1980s that said, losers average losers. And I've always loved that phrase.